You know what's funny? In crypto, everyone is obsessed with buying the next big thing. But the real skill, the one that actually puts money in your pocket, it's knowing when and how to sell. So today, we're going to pull back the curtain on the most critical yet most ignored part of investing, building a smart exit strategy.
Ah, yes, the million-dollar question. This is the one that keeps us all up at night, right? Do you sell now and risk missing out on a massive pump? Or do you wait too long and watch all those paper profits just disappear? Getting this right is what separates the pros from everyone else. And this slide just nails a psychological battle we all face. Buying is a rush. It's all excitement, opportunity, and that classic fear of missing out, FOMO. But selling? Whoa, that's a totally different beast. It's driven by fear, uncertainty, and doubt, FUD. Understanding this emotional whiplash is step one, because a cold, logical plan is your only weapon against it. And let's be real, the stakes right now are absolutely insane. We're in a market where the big coins are knocking on the door of all-time highs, and altcoins are on a daily double-digit roller coaster. In this kind of environment, just winging it is a recipe for disaster. You have to have a plan.
So how do we do it? Let's dive into part one, actually blueprinting your exit. This is all about creating your strategy before the market starts going crazy, turning that chaos into a predictable opportunity. One of the best ways to do this is a strategy called scaling out gradually. Look, trying to time the absolute tippy top of the market is pretty much impossible. So instead, you sell in stages. For example, maybe you sell a quarter of your position when you're up 20%, sell another quarter when you're up 40%, and then you let the rest ride. That's your moon bag.
And this is why that's so powerful. You get this amazing 2-for-1 benefit. First, you're locking in real profits, taking risk completely off the table. And second, you're massively reducing your own stress. You've already won, so the rest of your investment feels a lot less like a gamble.
All right, so you've got your blueprint. Awesome. But a plan is just a piece of paper if you can't execute it when the pressure is on, right? So this next part is all about the nitty-gritty, the technical side of making a perfect sale.
First up, we got to talk about this sneaky little thing called slippage. It's a silent profit killer. It's that gap between the price you think you're selling at and the price you actually get. In a crazy, fast-moving market, even a tiny bit of slippage on a big sale can cost you a fortune.
So what's the secret weapon against slippage? It's all about using limit orders. See, a market order just sells instantly at whatever the current price is, which can be a total disaster if the price is dumping. But a limit order? That only sells at the specific price you set. It gives you all the control and protects your profits.
Let me be super clear about this. If you're selling anything, and I mean anything, of a significant size, using limit orders isn't just a good idea. It is absolutely non-negotiable. It's your #1 defense.
Okay, next up is something called liquidity. And the best way to think about it is like the depth of a pool. Selling a lot of a high-volume coin like Bitcoin is like dropping a rock in the ocean. It barely makes a ripple. But trying to sell that same amount of a small, low-volume altcoin, that's like dropping a boulder in a puddle. You're going to make a huge splash and crash the price.
So what does that mean for you? It means before you even think about hitting that sell button, you have to do a quick check. Look at the order book. Look at the 24-hour trading volume. Make sure there are actually enough buyers out there to absorb what you're selling without tanking the price on yourself.
All right, you did it. You followed the plan, you executed the sale, you took your profits. High five. But hold on, we're not done yet. Now comes the most important step of all, actually securing those hard-earned gains. You've heard the saying, don't put all your eggs in one basket, right? Well, that is critical here. Relying on just one exchange is a huge risk. So spread it out. Use a big centralized exchange for speed, maybe a decentralized one for more control. And if you're selling a really massive amount, you should look into an OTC or over-the-counter desk to avoid moving the market.
And this quote right here, this is the core of it all. The market is designed to mess with your emotions. It'll throw crazy dips and euphoric spikes at you. Your plan, the one you made when you were calm and logical, is your anchor in that storm. You have to trust the plan, not the panic.
Okay, want to know a real pro move? Something that separates the beginners from the vets? Instead of selling straight to dollars, you sell to a stable coin, like USDT or USDC. This instantly locks in the value of your profit and protects you from a crash, but it keeps your money in crypto, ready to pounce on the next big opportunity. And it's super simple, just 2 steps. 1, you sell your risky coin for a stable one. Your gains are now safe. 2, you just wait.
You're on the sidelines, shielded from the crazy swings, with dry powder ready to go when you spot a perfect entry point. And this brings us to the absolute golden rule of crypto security. Get your funds off the exchange. Leaving a big pile of money on an exchange is just asking for trouble, from hacks to the exchange itself going bankrupt. Move it to a secure hardware wallet, what we call cold storage, where you and only you are in control.
Okay, wow, we have covered a ton. So let's wrap this all up into a final, simple checklist. Seriously, this is the part you might want to screenshot. This is your master plan.
And here it is. This is everything. You control your price with limit orders, you take profits by scaling out, you check liquidity before you sell, you hedge your risk with stablecoins, you spread your exits across different platforms, and the foundation of it all, emotional discipline and moving your money to cold storage. That's the whole game right there.
Oh, and one last thing, and please do not forget this. Your gross profit is not what you actually get to keep. Always factor in the hidden costs. You've got trading fees, withdrawal fees, and of course, the big one, capital gains taxes. You have to plan for these so you don't get a nasty surprise later.
So, when you boil it all down, what's the big takeaway? It's that selling well isn't about getting lucky. It's not about perfectly timing the market. It's a skill, a discipline you build through good planning, self-control, and smart risk management. And that really brings us to the most important part. Because listening to this is one thing, but doing is another. A plan on paper is worthless until you act on it. So my question to you is this. What is the one step, the very first step, you are going to take today to start building your own exit strategy?